Well, ING Direct is ramping up its efforts to become a bigger force in Australian financial services. It's in its 17th year. It's growing customers at a decent clip. Everyday banking, it says, grew by 39%, and home loans were up by 9% last year. But it's still only got a couple of percent of the total Aussie market, and its new chief executive, Uday Sareen, is tasked with expanding that rapidly. He's come from India's ING, and at just 100 days into the new job here, I spoke with him a short time ago. Uday Sareen, welcome to the program.
Thank you for having me.
Your mandate here is to grow ING. How are you going to do that?
And our customers have been telling us for the past years that we want more products. So clearly, in terms of way forward, we see us diversifying our product suite, increasing products, and really getting more customers.
What sort of products are they? You've already launched into superannuation. You've also got home loans as well as your traditional business, which was the online savings business. So what's next?
Well, the core businesses clearly are savings and mortgages, and that's core to us. But in terms of what's on the anvil, clearly the first one is a credit card. We are actually trialing a credit card with our staff as we speak, and that's been one of the demands with our customers long-standing. So that's coming, I would say, early next year. We also have insurance coming up to start with for our home buyers. So that's on the anvil over the next, I would say, 6 to 9 months.
Where do you think interest rates are heading in Australia? In the last 2 interest rate cuts that we saw, ING passed on the full amount in May and then only partially in August. If we see the RBA cut again, will you be able to pass that on to borrowers?
But interest rate is a function of cost of funds, what's happening in the competition, and as you rightly said, in May it was a full pass on. In the last cut, we actually took up our deposit rates. 1 year actually went up to 3.05, 7 months increased to about 2.95. So it's really a combination. Coming to the question of where interest rates are headed, if you look at the cycle, the cash rate has been cut by about 100 basis points since the beginning of last year. And our house view is another 25 basis points cut in this cycle.
Do you think broadly banks will be able to pass that on? You've obviously got really good oversight of where wholesale funds are, but also where deposits are heading. Do you have a sense that banks will be passing that on?
Well, like I said, it is really a combination of what the deposit rates are, what the cost of funding is, and different banks have a different situation. So you really have to look at what these factors are and how to take those decisions.
What's your view on the Australian economy? You've come in, you've been in the job for 100 days today, you've been in the country for 3 months. Where do you see the Australian economy heading?
Well, I think it would be reasonable to say, if you take any sort of estimates over the next 3 to 5 years, the economy is growing. 2.5% to 3% estimated GDP growth in a mature economy is solid and is robust. But at the same time, I think there is a transition well and truly underway over the last couple of years from mining to the services sector, and that's huge. So I think if you really look at, compared to the other mature economies, we are solid and we are growing.
A lot of that growth that we've seen has come off the back of housing, which sort of filled the void after mining. Now there's numerous economists and estimates that say that housing has reached its peak, that we'll see a pullback from here. How is ING modelling itself for that, based on the fact that you're here for aggressive growth and home loans is a part of that?
I think home loan is a key component of our business. Almost 90% of our balance sheet is mortgages. And if you look at housing, really it differs from different states. Clearly there's, in terms of Sydney and Melbourne, the demand is higher compared to Western Australia. And I think given the metrics of competitive interest rates and stable unemployment, and population growth. These are really the drivers of housing, and what we've seen over the last couple of years in terms of even a focus on lending norms. So we find that it's quite stable in terms of, and we will continue to grow, and the opportunity is huge.
There's been some criticism that Australia as an economy has focused so much on China that we've missed potential opportunities in India. Do you see it that way?
Well, I think India is today the fastest growing economy on the planet, with increase in real income and a rapidly growing middle class, and huge consumption opportunity.
Should we shift our attention more to India, given that the economy is expanding, whereas China, we're sensing a weakening there?
Well, it's not for me to comment on that, but really, if you look at the macro, India is having some strong metrics right now, and for the foreseeable medium term, even if you take 7.5% growth estimated over the next 4 to 5 years is probably a base case, and that on a relatively large base provides opportunity for consumption and trade, and clearly I think from an Australia perspective that's an opportunity.
Uday Sareen, thank you so much for joining the program.
Thanks, Elise.